Okay, testing 1 2 1 2. Janet, how are you?
Hey, I'm good. How are you?
I don't know if you can hear me all right. I can't hear you anymore, but just to make sure my screen is coming through and you can hear my voice all right.
Okay, I can hear you. I guess you can't hear me, but that's fine. I'll send you a chat message.
Oh, there you are. I hear you fine.
Okay, all right, good. It's all you now. You can have 1 hour.
Thank you so much. Thanks, everyone, for joining us today. Thanks to Trey Thursday for giving me the opportunity to speak. And today I want to talk to you about the three main components of a winning strategy. Now, what I'm going to be doing today is teaching you three of the elements that we have in virtually I'd say about 85 to 90% of all of our strategies and techniques at Specialist Trading. And you can start, once you learn these components and practice with them, you can start applying them to your own trading, or you can actually build a strategy based off of this. At any point in time, we have anywhere from one to all three of these in all of our techniques and methods at Specialist Trading. Now, as Janet said, my name is Stephen Primo. I am the president and founder of Specialist Trading. If you're not familiar with our website, just let me tell you first and foremost, we're a little bit different from other webinars and educators because we are first and foremost just an educational company. That's really what we're all about. See, it's our philosophy, upwards of 90%, is because you're basing your trades off of an outside source, meaning you're listening to someone or something tell you what to do, and then it's based off of faulty information or information that hasn't stood the test of time. What we try to do is give you all the information that I've accumulated in my nearly 40 years of trading, and then mentor you along the way to meet your needs and your personality, whatever market you want to trade, whatever time frame, and then work with you on that, and then basically leave you alone. It's up to you how you make your own trading decisions, because in my 40 years, the one thing I found is that the only way traders become consistent is by taking charge of their own trading, not by relying on someone or something else to tell them what to do, whether it's a news event or some trading guru, but just listening to the main thing that they're watching, which is the market in front of them. Now, I say this because I've been trading, as I stated, for 39 years. I started my career on the trading floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist for DLJ. There aren't a lot of specialists around anymore. The only ones left are the ones in New York, but a specialist doesn't mean you were any more special than anyone else. It just means that you specialize in a certain amount of stocks or equities because you made the market in those equities. So if anyone wanted to buy or sell a particular equity, they had to go to the trader who specialized or who had made markets in those. And that's what I did. I made markets in roughly about 50 stocks for about 9 years. I traded through the crash of 1987. I was on the floor when that happened. And then I left the market in the mid-90s when the bull market was in full
we know you're going to get something from,
and I've seen it traded through just about every market environment imaginable, from straight up markets, straight down markets, sideways markets, quiet markets. So I know what works in terms of consistency and what doesn't. So roughly about 7 years ago, I teamed up with my sister site, Pro Trader Strategies, where all I do is teach and mentor my students the tips and techniques I've accumulated in my nearly 40 years, and really, once again, try to put the power back in your hands. So that's what we are. We're an educational company. Even though we provide our students and members with strategies and signals for those strategies, those are more, for educational biases, to let you know what to look for. Ultimately, as we stated, we want you to be in charge of your own trading. Now, I'm going to show you these three great components today, but before we begin, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using these three main components. By the end of today's presentation, you should know how to implement them, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So, once again, we're required to show you this as you are taking a moment to view it. I would also like to invite each and every one of you, if you haven't started to already, to follow us on Twitter. There's our handle right there. It's an abbreviation for Specialist Trading. You may want to copy that down at SPCLSTTRADG. Each day I post free information about what our strategies, signals that have been currently generated to financial wisdom. So there's a lot of great limited information there because of the way Twitter is set up. If you'd like to get more detailed information about what we do, the courses we offer, and some informational videotapes, then I would encourage you to go to Facebook, Pro Trader Strategies. My sister site has put together a Facebook page, and you can get a lot more detailed information about what we do, myself, and and what we teach at Specialist
Traders, and it is Mark's first time joining us here on
so why
the
don't
Trade
we
Thursday
begin?
Live event.
And remember, as I stated, once again, we are an educational company. As you're going to be seeing in the next 30 minutes or so, we're all about educating you so that you know what to do and you make your own decisions. The reason why I emphasize this so strongly is because, believe it or not, and I make no secret about this, when I first started trading on the floor, I was doing everything probably the same way 99.9% of traders are taught, looking at all the news that was coming out, following all the basic indicators, following all the best time frames. And we didn't have chat rooms or trading rooms then, but I subscribed to tons of newsletters back in the 70s and 80s. And so I was doing all the right things, going to all the seminars, and guess what? I couldn't make a dime. For my first nearly 2 years of trading, I was barely breaking even. I didn't think I was going to be a trader much longer until I was lucky enough to have mentors on the floor. These were traders themselves, specialists who had been trading around 40 years each. They took me aside and they basically said that the same things I said earlier. I was relying on outside sources to tell me what to do, and my trading was overly complicated. And I basically was not listening to the one thing that I should be taking my cues from, and that was the market itself. So that's what they taught me. They taught me to strip away all these things that conventional wisdom tells us is supposed to work, but in reality there's really no consistency in them because they're too subjective. So what we want are things that are cut and dry, that two people looking at the same chart will come up with the same exact answer, the same exact representation. And the only way to do that is by not listening to outside sources. The only way to get to that point is by listening to the market. Because most of the time the market tells you in advance what it wants to do. And I'm going to show you that just through these three simple components today. All right? So as you see here, my goal is not to trade for you like so many other websites to tell you what to buy, what to sell. My goal is to teach you how to trade with the Specialist Edge. This is the same edge that turned my trading around, and this is the same edge that I instill on all of my students and members in roughly over 100 countries throughout the world and in every state in the United States. Now, one last thing is with all the other presenters, if you have any questions, let's hold off to the very end because I have a lot of great information to give you and I don't want to kind of slow down the presentation. So I'll take the questions at the very end of the presentation. Excuse me. All right, so let's begin. Here's what you're going to learn today in today's class. We're going to start off by component number one, teaching you how to trade in sync with the market. Whatever market you're trading, doesn't matter if it's currency pairs, stocks, futures, doesn't matter if you're an intraday trader or an investor. We're going to show you the simplest but most powerful way to be in sync with whatever market you're trading. Component number two, we're going to share with you a specific price bar that you should be looking for regardless of whatever technique you use. If it's one of my strategies, one of yours, you should be looking for this because it's a great clue coming from the market telling you most likely what it wants to do. And then lastly, an entry technique. So many traders fail not because they're really on the wrong side of the market or they have a bad trading idea. It's just because their entry technique is faulty. We're going to share with you an entry technique so you can start applying as early as Monday if you like, that we really feel will increase your odds for consistency in trading regardless of what method or technique you trade with. Okay, so let's start with component number one, which is basically trading 101. You must trade in sync with the trend. Now, everyone knows this. This is probably what you were taught the very first day of trading. But if everyone knows this, if this is just the standard for trading, then why do most people trade out of sync with the trend? Why are most traders
hopefully you guys will enjoy it like we do.
See, it's my opinion that the reason is because everyone and their sister has a different idea of how to discern what the trend is.
Or
a lot of people
very well acquainted with
relies on
our industry because we know there's a lot of people out there that are
other people think, well, no, you have to look at the higher time frame, and the lower time frame should be in sync with the higher time frame. So look at two different time frames of the same market. Or still has others who look at patterns and say, like, well, no, higher highs followed by higher lows means you're in an uptrend and vice versa for downtrend. Those are all very simple and very basic generic ways for following the trend. But we have something that's even simpler than that, and I feel much more powerful. Here it is. As we look at this generic chart, I specifically took out the name of it and the time frame because I don't want you to get stuck on thinking that, well, this only works on one market and one time frame. It absolutely does not matter. Okay? So looking at this, someone would say, well, Steve, if you ask me what the trend is, there is no trend. We're basically in a range going down, back up, and then back down again. So I've always been taught, don't trade ranging markets. In fact, that's where you get hurt. So there's no real trend here. That's not true. See, this is the way most people are taught. That's not true. Here's how to find out what the trend is, regardless of what market or time frame you're using. It's so easy. Just apply a 50-period moving average. And then you have to ask yourselves, you may want to write this down and post it on your computer screen. Ask yourself, where is price in relation to that 50-period moving average? Okay? Once again, I'll repeat that again. Where is price in relation to that 50-period moving average? Because you'll only get two possible scenarios. If price is above the way it is right here, well then, what is the market telling us? Remember, we're not taking our cue from some indicator or some guy in a chat room. We're listening to the market. And what is the market telling us? The market is telling us the overall trend is up. And if the overall trend is up, that means we should only be looking for buy setups. That's it. It's that simple. You should never be selling if price is above the 50. You should never be buying if price is below the 50. I don't care if you're trading a tick chart. I don't care if you're trading a monthly chart. In fact, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason why you lost money or you're inconsistent is because you were out of sync with this simple rule. Most likely you were selling above the 50 period and buying below. In fact, I think in the last presentation, someone was asking about the dollar-yen. I believe the dollar-yen has been above its 50-period moving average for a while. Why would you even short that? That's why most likely traders are having trouble being short that, because you're on the wrong side. Remember, we're trying to instill an element of consistency in your trading. We're not promising you the world and saying you're going to create thousands and thousands of % every year and retire at the end of the next year. We don't promise or believe in that. What we're trying to do is teach you how to become consistent in the market, because consistency equals success. Consistency equals longevity. And in my opinion, the only way you'll become consistent is by being on the right side of the market. So if price is above the 50, you should only be looking for buy setups. Doesn't mean you have to buy at the market. It just means that from then on, as long as price is above, regardless of what strategy or technique you use, you should only be a buyer. Now, conversely, let's look at this chart right here. Once again, someone who's not a member of our courses would say, well, Steve, once again, there's no trend here. We're going down, then back up. We're in a range. I'm going to get whipsawed if I do anything, so I'm going to stay out of this. Not true. The first thing we do is we add the 50-period moving average. Then we ask ourselves, where is price in relation to the 50-period moving average? Price is below, okay? If price is below, do we want to buy anything? No, we're going to be sellers. So what is the market telling us? Remember, not what some guy on TV is telling us or some guy in a webinar. What is the market telling us? The market is telling us the overall trend is down. Therefore, we should only be looking for sell setups only. We won't ever buy if we are below the 50. I've often told my students in my courses, in my classes, if I were stranded on a desert island and can only trade with one technique or one tool, this would be the one. Because in my nearly 40 years of trading, this has helped me so much. Why? Because it helps me to be consistent, because I'm in sync with what the market wants to do. All right, so now you know what the overall trend is and what side you should be on. Let's go to component number 2. We want to look for bars that close either in the top or bottom 25% of their range. Remember, I told you, this is the reason why we're looking for this, is because this is the market giving us a tremendous clue as to what it wants to do. I know we can all go to presentations, webinars, we can all read things on the blogs or what guys are saying about the markets, and they're all their own opinions about what they think the market's going to do. Who would you rather listen to, them or listen to the market itself? I think I'd rather listen to the market. So take our clues from the market, not even from myself. I'm just telling you what to look for. I'm not telling you what the market's going to do. I have no idea what the market's going to do. I just listen to it and follow along. So let's go back and look at our examples here. First of all, this is what we're looking for. Once again, it does not matter if this was a 5-minute chart. It would not matter if it's a monthly chart. It's all the same. But what we're looking for is a bar that closes in the top 25% of its range. So all you have to do is look at a bar, and after practice, you'll be able to see this in a matter of seconds. You just look at a bar, divide it by 4 separate but equal parts. If it closes in that top 25%, and if the bar is above the 50-period moving average, well, what is the market telling us? The market is telling us that's an indication to buy, because most likely it's going higher. Okay, what a great clue coming from the market. Wouldn't you like to have that edge every day in whatever you're trading, the market telling you what it's doing? We're just translating what the market wants to do because, unfortunately, the market speaks another language. All right, so if we look at this older generic chart once again, these are the three bars that closed in the top 25% of their range. Remember, it does not matter where students get so confused as they say, well, Steve, wouldn't it be different for a candlestick? The range is just the very high of the bar and the very low of the bar. Okay, don't overcomplicate it by thinking it's the open to close range. That's not the range. The range is the top of the wick to the bottom of the wick. And if you divide it by 4 separate but equal parts, if you close in that top 25%, that's an indication to go long. Okay? Now conversely, what if we see a bar that looks like this? Well, we divide it by 4 separate but equal parts. If we close in that bottom 25%, the market, not someone else, but the market is telling us that that's an indication to sell. Most likely it's going to be going lower. Once again, it doesn't matter if this is a tick chart or a weekly bar. It makes absolutely no difference. So we look at this older generic chart once again. We're below the 50 period, and here's a bar that closed in its bottom 25%. All right, so we've got the first two components. Now let's go to component number 3. Here's our entry technique. Once we found the first two components, how do we enter? We enter upon the confirmation of trend. Okay, I'm sure right now most of you are saying, what does that mean? I thought you already told us what the trend was, the overall trend was, the 50-period moving average. What's the confirmation of trend? Here's our confirmation method. And I'm sure you've heard this before. It's very simple, but you only want to buy if price trades 1 to 5 ticks above the bar that closed in the top 25% of its range. Because this is the market telling you that most likely it's going to continue in that direction. So you want to most likely see it happen on the next bar. So we said if we're above the 50 and we have a bar that closes in the top 25% of its range, we're only going to enter if we trade above that bar that closed in the top quarter of its range on the next bar. So let's look at this older example here. Taking the first green bar, we close in the top 25%, so we want to buy if we trade just above it. But it has to be on the very next bar. Did we trade above it? No. So nothing happened. And it's a good thing because, there was no momentum that continued. Now we have another scenario. Here's another bar closes at the top 25%. We want to buy if we trade there. It doesn't have to close there. This is where students get confused. They say, well, Steve, it didn't close there, so I didn't buy it. We don't care where it closes. All we want to see is that intra-bar, it trades above the bar that closed in the top 25%. So if we see that, well, that's our entry point, and we had a nice follow-through. I know it doesn't look like a lot, but for all you know, these are yearly bars, and that could have been 5 years where we went straight up. Now we have our third scenario. Once again, this is where we want to purchase. We can only do it on the next bar only because we're trying to capture momentum. And guess what? We entered again. We don't care where we close. Don't look at this and say, well, Steve, we closed lower. I would have been losing. It doesn't matter. We're just trying to catch momentum. Many times things do not pan out in the very first or second bar after we enter. We have to wait a little bit sometimes. Other times it goes right in our direction. That's okay. Give it some room because on the very next bar, look what happened. So you see how powerful these edges are, these three main components, and we're getting them not from listening to anybody, not from some chat room. We're getting them from the screen in front of us, from the chart. It's a lot cheaper and a lot easier. Everyone looking at this will come up with the same conclusion. A bar closes in the top 25%. You can't dispute that. Everyone will see that. We're below the 50-period moving average. You can't argue that. It's all cut and dry. This is the way trading should be. It should be cut and dry. It shouldn't be, well, when price starts to move around here, you may want to start thinking about buying. What does that mean? You may want to start thinking about buying. This is why most traders fail, because you're trying to emulate or copy someone else. Now, they may have a great idea of what to do, but you can't mimic that. You're a different person. So when trading is cut and dry the way we're explaining here, it makes things a lot easier, and we're basing all of our trades off of the market. We're trading, not off of an outside source. Let's look at the confirmation method if we want to go short. Now we're going to sell if price trades 1 to 5 ticks below the bar that closed in the bottom quarter of its range. Okay, so we look at that example once again. We're below the 50. We have the bar in red that closed in the bottom 25% of its range. So this means we can go short, but only if we trade below that bar on the next bar. Okay, we're not going to wait around for 5 or 10 bars. Excuse me. We're not going to, hold off and say, well, I'll just keep an order in there if it ever gets below there. No, it has to happen on the next bar because we're trying to catch momentum. The market has given us a great clue as to what it wants to do, but we have to kind of, see if it's going to follow through or not. So the very next bar, it does trade there. We go short, we enter. Remember, it didn't close there, but we're not interested in where it closes. The only thing we care about is that it traded below there. So that's our entry point. 1 or 2 ticks right below. Remember, this could be a daily bar, it could be a weekly, it could be a tick chart. It does not matter. The same technique applies to all markets, all time frames. It could be currency pairs, it could be a stock, it could be the E-mini futures. And look what happens. You see, trading is really simple when we just take our cues off of the chart in front of us. Trading is very complicated when we are taking our cues from a lot of outside sources, either tons of indicators, out of tons of news events, out of tons of chat rooms or trading rooms. It's overcomplicating our decision-making process. And basically, when you overcomplicate your trading and listen to a lot of outside sources, basically what you're telling the market is, I'm taking myself out of the game. I really don't know how to do this, so I'm going to rely on everyone else to tell me what to do. And, trading shouldn't be like that. Can you imagine a doctor or a lawyer thinking that way? Well, I'm taking myself out. I'm going to let you make the decision. Trading is a profession. It's a business like anything else. You have to approach it that way. You can't approach it thinking that, well, this guy has all the answers, so I'll just follow and mimic him in his trading room. It doesn't work that way. Trust me, I know from firsthand experience because this is the way I tried to trade, and for 2 years, I couldn't make a dime. All right, so now these 3 components, as I stated, make up probably one of our most consistent strategies, strategy number 4. This is a great strategy, our most popular strategy. It's traded by hedge fund traders. It's also traded by people who just started trading a few weeks prior and have shown remarkable amounts of consistency in their trading. It's extremely simple. It incorporates all 3 of these components I just shared with you. So you basically have 3 of the 5 rules of this particular strategy. Now, I'm sorry, I'm going to show you a bunch of strategy number 4 examples, but I can't give you all of the rules because it wouldn't be fair to the people that purchased the strategy for good money. I'm giving you the majority of the rules, though, and once again, you can start applying these rules to whatever you're trading right now, or you can build a strategy based off of this. But let me show you some of the most recent examples, and we'll go through all the markets. Let's start out with stocks here. Here's an example in STZ. Now, once again, someone looking at this would say, well, Steve, there's no trend. We're basically in a range market. I'm not going to do anything here. No, it's not true. We are above the 50-period moving average. So what's the overall trend? The overall trend is up. So are we going to short STZ? No, we're not. This is the very first day of 2016, just about 3 or 4 weeks ago. So we're looking for buy setups. Okay, so component number 1 is established. The overall trend is up. Now we find a bar here that closed in its top 25%. It's component number 2. That's the market telling us, giving us a clue that it most likely wants to go up. Now I know a lot of you would say, well, Steve, here's a bar that closed in the top 25%. It didn't work out very well. Here's another one. It didn't work out that great. Remember, we're talking about strategy number 4. There are 2 more rules that I can't divulge here that really fine-tune and filter out a lot of the noise that you may find from time to time. Now, the strategy automatically generated, the software generated a buy signal because this meets all the rules. These separate bars did not meet the rules, so therefore you would not have gotten involved in them. But this one did. It met all of the rules of the strategy, but we cannot just enter at the market. We have to use our 3rd component, meaning we're going to buy only if we trade above this bar on the next bar. So let's see what happened. This was the very first day, I believe, of the year, and we opened and traded higher. Okay, so great. Now, once again, we do not trade systems at Specialist Trading. Systems mean that everyone has to trade the same way each and every time. We don't believe in that. We should trade rule-based, which I'm sharing with you today, but you should also allow yourself 25 to 30% insight, meaning that, well, the market is choppy. I may change to be a more conservative trader, or the market is really volatile. I'll be more aggressive, take advantage of this movement. It's up to you. So we teach you this in our mentoring and in our courses. So someone could have gotten in and gotten out the same day. It's up to you. Whereas others could have tried to go for the long haul and in 3 days gone for a 12-point gain. Okay? This was just the first couple of weeks of this year. This was an actual trade with strategy number 4. Here's another one now in IBM. Where is price in relation to the 50-period moving average? Price is below. So are we going to buy IBM here? This was in November. No, we're not even going to consider buying IBM. We don't care if it has a nice bounce. The only way we'll look to buy IBM if it is consistent closes above the 50. All right, so IBM is below the 50-period moving average. All right, and here's a bar that closes in its bottom 25%. Now, we have other bars that close in their bottom 25%, but this one met all of the rules of the strategy number 4. 2 more rules, I'm sorry, I can't divulge. And the software generated a sell signal. But we can't just short at the market. We need a little bit more confirmation. Remember our confirmation entry tool, our technique. So we can only enter if we trade below that setup bar, and we can only enter the next day. If the next day IBM went straight up, well, nothing lost. We didn't get short because we never traded below, so we saved ourselves some losses. So as you can see here, we did go, and we did enter the next day. So we're now short IBM. This was a couple of months ago, and the stock went down 10 points in just about 2 weeks. All right? We didn't know about any news. We didn't know about what was going on in the company. The market told us what to do. MCK, here's another example where people would say, boy, we're really in a ranging market. There's absolutely no direction here. That's not true. In December coming into January, we're basically above the 50-period moving average. Even though we're oscillating a few bars above and below, the majority price is above, so the overall trend is up. If the overall trend is up, we're only looking for buy setups, okay? We have a bar here that closed in its top 25%, and it met all of the rules of the strategy, all right? So people would say, well, why didn't you buy there? Well, component number 3, we never traded above that, the next bar. So there was no entry. So you see here, we only traded this high. We never got above that bar, so we didn't enter. So there was no setup, or I should say there was a setup, but there was no entry off of the setup. So we're on the sidelines still. But guess what? 3 days later, here's another setup. See, the market is giving us clues, kind of fits and starts. It wants to go higher. Here's another setup. All right, so we just can't buy at the market again, because had we done that here, well, we would have thought for 2 or 3 days we had an okay trade, and then we probably would have stopped ourselves out, getting scared that we were coming straight down. But on this one, we're going to use our entry technique. We can only buy if we trade above. So this is a valid setup to go long. We can only buy if we trade above here on the next bar, and we did. Even though we didn't close there, MCK, gained 10 points in just 1 week. This was coming into January. Remember, looking at this chart, prior to that nice big move, someone would say, well, Steve, this is a whipsaw market. Nothing is happening, so I'm not going to trade this. You're going to miss a lot of trades by thinking that way, because you're basing your trades off of conventional wisdom. And in 40 years, I found there's really no consistency in conventional wisdom. The consistency only comes with following things that have stood the test of time, and that's basically listening to one thing, the market or the chart in front of you. How about UPS? Okay, this was coming into the new year. Where is price in relation to the 50-period moving average? Well, originally we were above the 50, but then in December we decidedly came much below it, even though we bounced. And people would say, well, Steve, look at this. We could have had a nice buy here. We don't care. You're going to see a lot of times where you have some great bounces below the 50, some great rallies, and you'll see some great sell-offs above the 50. That's okay. We don't care about that. Just bypass them. That's a gambling mentality. You don't have to always think you're going to sell at the top and buy at the bottom. What we're trying to do is instill consistency, and there is no consistency in that type of trading. If you're looking for the bottoms, you'll catch them every once in a while, maybe 2-3 times, but it's the 4th or 5th time where you always give everything back. So we're not, why even trade that way? It's similar to going to Las Vegas and playing the slot machines. They will give you a false sense of security, thinking every once in a while you have a nice winner. You hear the bells and whistles and the money clanging there, the coin. But over time, you have nothing to show for it. You're really losing money. Picking tops to be in sync with the overall trend. So you miss a top, so you miss a bottom. Who cares? There's always lots and lots of setups coming up. So we see here a bar that closes in its bottom 25%, and the software generated a valid sell setup. Are we going to sell at the market? No. We can only sell if we trade below it on the next day. So for all we know, something could come out overnight, or maybe a big rally and we open higher and then keep going higher. So we don't want to just sell at the market. We want to fine-tune our entry. Well, it was a good idea. We gapped a little lower, but that's okay. UPS fell 12 points in 1 month, okay, coming into this week of January. Everything that we see from our strategies only comes from the market. We don't care about news. We don't care about tons of indicators. We don't believe in chat rooms or trade rooms because those only serve to have you try to mimic or you follow someone. We're an educational company. We just want to put the power in your hands and then let you decide how you want to trade. Now, I just showed you a couple examples where you had some really nice big, movements in 2 or 3 weeks, 10, 15 points. You don't have to take those big moves every once in a while. Strategy 4 will generate quick moves and smaller gains, but on a relative basis, they're also great trades as well. Here's an example in JES gas. We're above the 50 period. Very simple to see. The strategy generated a buy setup based off this bar here. It met all the rules requirements of the stock, so we have a buy setup here. And here's where we want to enter to go long. So we would have entered, I believe, on the 28th. This was a valid signal, and it was only a 1-point gain, but many of our traders like to use this strategy to get in and out rather quickly. It was designed to get in and out rather quickly, to take a few points and then go on to the next one, because you see so many signals generated on a nightly basis if you're looking at stocks. There are also, it can be applied to any market, any time frame. So it not only has to go for that long swing of 10 or 20 points, you can get in and out with 1 or 2 point gain if you like as well. This was an actual signal. This was just this past week. Now, I specifically want to show you this. This is IWM. This is the ETF for the Russell Index. As you can see here, coming into the new year, a lot of people were really caught off guard by the large sell-off we had at the beginning of the year. But if you're looking at the Russell 2000 Index ETF, going back to the beginning of December, where was price in relation to the 50-period moving average? Price is below, right? So was there any doubt in your mind that the 2,000 stocks that make up this index were telling you we're in a overall downtrend? So you shouldn't have been long at all, okay? Now, strategy number 4 generated 2 sell signals, one on the 17th and one on the 30th of December. We were short weeks before this massive sell-off that came, and then 19-point gain in the first 3 weeks of 2016. Remember, we didn't care about what's going on in China. We didn't care about what's going on with interest rates. We don't care about these high-speed frequency funds. It doesn't matter. The market tells you most likely in advance what it wants to do. All right, let's move on to a different market to show you the exact same rules, how they work with the E-mini S&P. I'm specifically going to start going back a little bit further in time to show you that this strategy works very well. It has a high level of consistency, but oftentimes it will have losing trades. I'm not going to sit here and tell you that every trade is a winner, but that's okay. That's perfectly normal. There's nothing wrong with losing trades. The only thing wrong is if you have this type of inverse consistency where it's 1 step forward, 2 steps back. Our strategies, we take pride in having consistency where it's 2 steps forward, 1 step back. Here's a perfect example. In August of this past year, here's a chart in the E-mini. This is a more advanced setup for advanced traders who've been trading for a while, but we're oscillating above and below the 50-period moving average on the E-mini. These are daily bars. But the software generated a buy signal here. Even though a lot of bars closed below the 50, we closed above on this bar and in the top 25%, so this is a more advanced setup. Okay? But look what happened. We would have entered and immediately went down, you're stopped out. So that was a losing trade. Okay? That happens every once in a while. But as we went further into the next week, we see here that some more bars were still oscillating above and below, but this bar in particular generated another sell signal. This was on the 19th of August. Okay? Now, a lot of people would say, well, boy, Steve, I just got hurt on that last one. Remember, when you feel confident with what you're trading and you're getting your signals from the market, it's a lot easier to take these setups. Now, this was a valid setup to go short on the 19th of August, but we couldn't go short unless we traded below that the next day. And as you can see, we did. Okay? Now, this was well before we all know what happened in August. Remember at one time, intraday, the market was down over 1,000 points? No one called us up and told us that. No one told us the market was going to be down that much in the next 3 days. But the E-mini fell 230 points in 3 days. That's nearly $12,000 per one contract. Okay? I'm not saying that all of our students stayed in for all the 3 days. Many of our students got in and out that next day, the same day, okay? Maybe 5, 10 points. But this is the beauty of what we're trying to show you. When you listen to the market gives you clues in advance as to most likely what it wants to do. So you could have easily made back that loss on the 10th of August, just waiting a couple of weeks later for what happened on the 19th. Remember, there was all this news about China and how things were going terribly there, or what's going on in the world, or high-speed funds. No one called us up and told us that on the 19th of August. We were just listening to the market. That's a daily bar. Let's go down to now something a different, closer time frame. Still looking at a daily bar, but let's look at another aggressive trade here for more advanced traders. But this is coming into the beginning of this year. Now, the majority of bars were below the 50 period. We had one bar that closed above, but then quickly closed back below. And then guess what? We are closing in the bottom 25%, and all of the other rules of strategy number 4 were met. So on the 30th of December, once again, the E-mini generated a sales signal, okay? We knew the market was going down prior to all this great sell-off we had in the first weeks of January. And basically, if you would have stayed in the market, you would have had 130 points roughly in 3 or 4 days. Actually, it was more like about 4 days. You see how easy it is when you're in sync with the overall trend and listening to only one market. So those are daily bars. Let's look at a 10-minute time frame. This is at the end of December. We are looking at a 10-minute chart of the E-mini. Coming into the 22nd, well, we closed above, and we had consistent closes above the 50 period, which is right here. So are we going to try and sell the E-mini? Not at all. I don't care if it makes a top. We're not interested in selling because we may have one great sell at the very top and then we'll give it all back trying to use that same technique. We're only trying to be buyers. So the software generated 2 buy setups right here, and we would have entered into both of them, and look what happened. If you were lucky enough to hold on to this position for 2 days, that's 40 points in 2 days, okay? $2,000 per contract. And then let me show you what happened yesterday, just to share with you we're not trying to cherry pick anything. This was what happened yesterday. We all know that the market was going up yesterday. Here's a 5-minute chart of the E-mini. I personally trade the E-minis myself. Now coming into the day, we knew on a 5-minute time frame to be buyers. We weren't going to sell anything as long as we're above the 50. None of our students were selling the E-mini as long as you're above the 50. Now remember, it changes with each different time frame, but we don't overcomplicate our trading by looking at 2 different time frames. You know, you could do that if you like, but we only tell our students just trade the market you're looking at. If you're looking at a tick chart, that's the only thing you should be concerned about. Don't worry about what's happening in a different time frame. If you're trading a 5-minute chart, that's the only chart you should be concerned about. Don't worry about what's happening in the hourly or the daily. You're only going to serve to confuse yourself, and you're actually, most likely, it's been my experience that you'll miss a lot of good trades by waiting for the 2 to line up. So just worry about the chart you're trading. So trading a 5-minute chart yesterday, we see here that, you know, someone looking back in hindsight, I would say, well, yes, Steve, it's easy to see, you know, because, you know, the market went up all day. It's easy to be long. Well, sure, you know, even looking back and seeing we were above the 50, it was easy to be long. But how would you like to know at all these different points to go long using strategy number 4, which is based off of the 3 components I've revealed to you today? Each one of these setups on a 5-minute time frame uses the 3 components I taught. And had you taken that very first one, roughly about 7:30, 7:40 a.m. Pacific time, and stayed in the entire day, you would have gained 27 points, roughly nearly $1,400 per contract. We're not saying all of our students did, but remember, we allow you to make your own decisions. It's up to you. We just give you the high probability techniques and edges and then mentor you and then let you run with it. Lastly, let's look at the Forex markets. Once again, these techniques, it does not matter what time frame, it does not matter what market. If we look at a chart here, a weekly chart, let's go to an entirely different time frame, weekly chart of the Canadian dollar. Now looking at this last June, someone would say, well, Steve, we should sell the Canadian dollar because look how low it's going. It's in a downtrend. Nope. If you look at that green line at the very bottom, that's the 50-period moving average on a weekly bar. Where is price in relation to that? Price is above. So are we going to sell the Canadian dollar on a weekly time frame? No. We're looking for buy setups. And guess what? Here's a buy setup, a bar that closes in its top 25% of its range. And it met all of the rules of the particular strategy, so we generated a buy signal. But we can only go long if we trade above that bar starting the very next week. Okay? Well, it did. So on a weekly basis, we would have been long the Canadian dollar starting in June 2015, and we've seen what the Canadian dollar has done. 1,100 pips in the next 5-6 months, $11,000 per contract. So the same things work in every market, every time frame, the same components. There's a very high level of consistency. The only reason why most traders don't like to use them is because you have to become a part of the process. And for some reason, it's human nature to mimic or to take your cue from someone else. Okay? If you really feel you must, because trust me, I did. I felt, I was, at the time, there was neural networks were getting very large in the very beginning in the 80s and 90s. I was, so sure that I was going to start trading with neural networks because basically it took all the decision process out of me. I didn't want to do that because my mentor said, you're not part of the game when you do that. You have to be a part of the decision-making process. So if you want to take your cue from something, don't take it from me because I don't know what the market's going to be doing any more than anyone else. I have no idea. Don't take it from someone on TV or from some news event. Take it from what you're trading. If you have to listen to something, listen to the market because, as you've just seen here, it most likely tells you in advance what it wants to do. All right, so let's recap what you learned today. We share with you the three components: how to trade in sync with the market, and that's simply use the 50-period moving average to tell you what the overall trend is. Apply the 50-period of whatever market you're trading. So if you're looking at a 5-minute bar, apply a 50-period simple moving average of the 5-minute bars. Don't apply a 50-period moving average of daily bars because you're not trading daily bars. Or don't apply a 50-period moving average of an hourly chart. That's not what you're trading. You're trading based off 5 minutes, so the moving average should be based off of 5-minute bars. And then if price is above, the overall trend is up. If price is below, the overall trend is below. So if the overall trend is above, are you going to be selling? No, you're only going to be buying. If the overall trend is below, are you going to be buying? No, you'll only be selling. Once again, go back and look at your last 10 or 20 trades. I can almost guarantee that your losers were because you were out of sync with this simple rule. That's how powerful it is. Component number 2, we want to look for a specific price bar pattern. All right, what's this price bar pattern? If your bars are above the if your bars are above the 50-period moving average, look for it to close in the top 25%. That's a clue that the market is going higher. If the bar is below the 50-period, look for the bar to close in the bottom 25% of its range. That's your clue coming from the market that it wants to go lower. Okay. And then lastly, our entry technique. And you can apply this to any strategy you have. It doesn't have to be this or anything else. But remember, once you get a buy setup, don't just simply buy at the market or place the lower limit. Wait for price to trade that bar above that bar that closed in the 25% range, and wait for price to close below that bar that closed in the bottom 25% range. You'll have a higher level of consistency if you follow all three of these components. Trust me, my trading didn't start to turn around until I began to apply these. I did the same thing everyone else did. I was trying to pick tops and bottoms. I would wait for all the oscillators to be overbought, and I would sell, and it would work every once in a while, but then the times it didn't work, I'd give everything back, and vice versa. It wasn't until I really found out how to find what the true overall trend was, I found out what the market was trying to tell me in a clue, and then I found out how to enter, that my trading started to become consistent. Remember, we're not going to promise you tons and tons of gains and say that you're going to be able to buy a house by the end of the year. We don't believe in that, once again. All we're going to promise you is that we're going to instill you with sound fundamental information that has stood the test of time and that will put the power back in your hands. This is not something where we require you to pay monthly fees to be here with us at Specialist Trading so that you can learn more and more and be able to trade. Once most of our students learn all of our techniques, we don't hear from them ever again because they're consistent. They're doing fine, and that's what we want. You don't have to stick around. So these are the three main components. We use these in roughly about 80 to 90% of all of our trading methods to this day. So in closing, I want you to ask yourself, before we go into question and answers, I want to ask you something. Ask yourself, do you think any of these edges could have helped your trading this past year? Just any one. If you had applied all three, or if you had maybe just used one, do you think they could have helped? Remember, we just gave you 3 edges. These are not a complete strategy. Strategy number 4 uses 3 of these edges as 3 of their most basic rules. But we didn't talk to you about exit points. We didn't talk about money management. We didn't talk about stop placement. Those are all very important components. Now, what if I could give you more edges, such as the one I share with you today? Okay, what if I give you 3? What if I give you 5 more? Totally separate edges, entirely different from what I shared with you today. Well, this is what we're offering for our association with Trade Thirsty today. Here's our special attendee discount. It's our Secrets of a Stock Exchange Specialist training session. Now, about 3 years ago, I was asked to speak and be the featured speaker at a seminar in Denver, where I spoke for 3 hours, and I went over a lot of more different edges and techniques, what I shared with you today. Not the same ones, entirely different ones. And I spoke for 3 hours, and they recorded the entire thing on a video. Now, we have access to that video, and so this is what Secrets of a Stock Exchange Specialist Training Sessions is. It's a video seminar of me speaking for 3 hours that people paid good money to come and hear me speak to get different edges. But I think the best thing about this training session is that within my speaking engagement, I also gave the rules, the entire rules, to one of our best pullback strategies, and that is strategy number 1. So let me share with you some recent strategy number 1 signals. This is an entirely different course at Specialist Trading. I gave all the rules to all the attendees that day, and that's in this 3-hour video. So let me show you how this works here. These are some of the signals that were generated recently. Here's one in PSA. We realize that this isn't a very expensive stock, but you could easily apply options to whatever a buy or sell signal has happened. On the 14th, a little over a month ago, a buy signal was generated. You see how we were pulling back. A lot of people were thinking PSA was rolling over and the market was heading lower, but the strategy just deemed that this was a pullback. So the strategy generated a buy signal off of this little sell-off, and stock went up 8 points the next day. That's a nice gain in one day. And that just doesn't work on the upside. Here's an example in American Express in November coming into the middle of December. The strategy generated sell signals each time we had a little pullback to the upside or a bounce. Every time we bounced, guess what happened? We had a little sell signal that was generated. Another sell-off to the downside, a bounce, another sell signal. Now, once again, you can decide how long and you want to be in these trades. You can get in and out rather quickly, and oftentimes, if you hold out, there's a great signal that will happen before a news event. This was a generated sell signal on the 29th of December, and look what happened the next few days in the market, okay? So 9 points to the downside here if you had held out for all of those trades. But remember, once again, we don't care about the news, but oftentimes our strategies work in conjunction with the news prior to that being announced. Now, you can also apply the exact same strategies. There's no differentiation on the rules because we're changing markets or time frame. Here's a 1-minute chart of the E-mini, okay? Now, as you can see here, towards the end of the day, we had a really nice run-up on this 1-minute chart, and then we started to sell off rather quickly. Okay, a lot of people are thinking, well, the end of the day here, we're just going to sell off, and all of the short traders are going to cap in on all that nice gain here. But the strategy generated a buy signal, saying that this was just a pullback in an uptrend. And this was roughly the last hour of the day, and in the last hour, you could have generated 10-point gain in your favor using the exact same rules. Lastly, it also works in currency pairs. Here's the British pound. The British pound has been going lower, but the strategy has known all along that we're in a downtrend. Even when we have these nice bounces, as we did here coming into December, the strategy generated a sell signal, and we had a nice sell-off in the British pound. Now, another rally ensued, people thinking, well, maybe we've bounced and maybe we've bottomed out in the British pound. No, the strategy generated another sell signal about a month ago, and the British pound has gone lower. So the entire rules to this strategy are included in the Secrets of a Stock Exchange Specialist training sessions, okay? Remember, today I just gave you 3 components. They're not a full-fledged strategy. They're the 3 main components of a strategy that we have at Specialist Trading, but they're not the full-fledged strategy. But on this video seminar, I do give you all the rules: entries, exit, stop placement. In addition, remember, this can be applied to any market, any time frame, along with all of the high probability trading edges in this 3-hour video seminar, okay? So our sister site, which is Pro Trader Strategies, they have this marketed on their site for close to $1,000. That's how powerful it is. For the next couple of days, for all the attendees today at Trade Thirsty, we are dropping the price to $37. All right, but this is for a limited time. I believe only the next 48 hours at most. So, you know, if you're really on the fence, I don't think you can get a better deal for $37. In fact, I can almost guarantee that most of you spent more than $37 in commission costs just yesterday trading alone. You can't go out to dinner with another one person for less than $50 or $100 these days. So you're going to get 3 hours of an online course. This is not something you have to wait to be sent to you. This is an actual online course. You can watch it at your own leisure whenever you'd like. We send you the link, and you can watch it on your break time at work, on your lunch hour. You can watch it at home whenever you want on the weekends, just to absorb all this information. Included all the complete rules to one of our best pullback strategies. That's strategy number 1. And I think probably more important than that is that you have lifetime correspondence with me, because once you are a student of mine, you're a student of mine for life. It doesn't matter if you purchase one of our expensive products or if you purchase a $37 product. It doesn't matter. You're still a student, and I'm still going to be mentoring you, so you have access to my email. You can contact me whenever you like with any questions concerning anything you've learned. So here's how to take advantage of this great deal here. As I stated, Pro Trader Strategies, they're the ones to contact. They have all of my courses and trading methodologies marketed. You can email them, as you see there, call them directly, but the link is at the very bottom, as you see it there. That's the link you actually want to go to. Unfortunately, that's not a live link. All you have to do, though, is copy and paste that. If you just copy and paste that, you'll see that right. It'll take you right to the $37 sign-up page, and you can be up and running as early as today. So I'm going to leave all this information up. Once again, if you have any difficulty, if you can't connect to that link, all you have to do is just call Pro Trader Strategies. There's the number right there, or email them and tell them you attended the Trade Thirsty presentation and that I spoke and talked about the $37 offer. But remember, this has to happen within the next couple of days before the price goes back to nearly $1,000. Okay, that's how much information is included and is involved in this. So I strongly urge you to take advantage of that. I'm going to, once again, leave all this information up here. I see the question and answer box. I'll open this up here. Let's see. Mary Beth asks, can you download the course so that you can watch it without being connected to the internet? No, Mary. The course is actually online. It's a video, and I believe you have to be connected. But that may be something you want to ask Pro Trader Strategies. Maybe there's a way to do that without that. Question: what S&P will do now? But buy it next day over last day's top. Once again, this is, you should never ask. In our opinion, it's a supreme sin to ask anybody, what do you think? That's similar to a bunch of guys at the bar or at the horse races saying, who do you like at the fit? When you do that, you take yourself out of the game. I never ask anyone what I think the market's going to do. I really don't care. I only listen to one thing, and that's the market in front of me. When you learn how to listen to the market, you don't really care what other people think, and most of the time they're wrong. I mean, if someone asks me my opinion, there's no validity in that. All I'm saying is that, listen, ask yourself, whatever time frame you're trading, where is price in relation to that? If price is above, well, then you're going to be a buyer. Does that mean you buy at the market? No, obviously not. You have to look for structure. Okay, you have to look for some type of structure to get in. I provided you with structure today, these 3 components. Okay, but it can be one of your strategies. It can be someone else's. It doesn't matter. But this will really help you. A very common question here. Calvin asks, Steve, can these strategies work with the 20-period simple moving average? That's a great question, Calvin. Yes, they can, because nothing is written in stone. We encourage everyone to experiment with these formats. It's just been my experience in nearly 40 years that you don't want to overcomplicate your trading. That's where you get into trouble. You start using too many indicators, following too many gurus, listening to too much news. That's where you start to get on that road to inconsistency. When you keep things simple, that's the road to consistency. So the way I found to keep things simple is by applying the 50-period moving average, because it works the best, in my opinion, on every market, every time frame. So in other words, if I'm looking at a daily chart of the dollar-yen, I can change to a different moving average. I say, well, the 20 exponential works much better here, so I have to change. Or now look at a tick chart of the E-mini, I got to go to a 10-minute simple moving average. See, it gets too complicated. The best thing I have found in my 40 years is the 50-period, because it's every time frame. Okay, so the main thing I want you to understand is it's not a strategy. It's not a technique telling you to buy or sell. It's simply a technique to put you on the right side. Your consistency level automatically jumps up tremendously. You've just increased your odds for success. So that's all this tool is for. It's not meant to tell you, well, that's a buy signal, that's a sell signal. No, it doesn't do that. But most traders fail because they're on the wrong side. I mean, the gentleman was talking about being long or short the dollar-yen. Go look at a daily chart of the dollar-yen. I mean, I can almost guarantee, I haven't looked at it, but I know it's above the 50-period moving average. Why would you be short there? That's why most traders fail. Only use this to tell you what side of the market to be on, okay? A lot of people are saying they can't copy the link. Many times just look over in your answer box and it should be right there. They post it up there for you, okay, if you're having difficulty. And the link is in your, if you open the question and answer box, it should be in the far right-hand corner in the answer column. But once again, if you're having difficulty, you can go to your chat box and you'll see it's right there live on your chat box because the screen is not live, okay? It's a static PowerPoint presentation, unfortunately. But if you chat box on the far right of the go to webinar column, you'll see under Janet, I believe, has posted there for the entire audience, okay? Let's see here. Question, does this stock strategies, do they work for E-mini and Forex? Yes, they work for every market, every time frame. Remember, I've shown you examples on everything. For strategy 4, I showed you examples on every market, every time frame. We went over stocks, futures. I showed you ETFs. I showed you currency pairs. And strategy number 1, I just shared with you that British pound example. I shared with you that 1-minute chart of the E-mini, and I shared with you a couple of stock examples. So you see, they work in every market, every time frame. Mark asks, do you ever use a buy signal to write a put to open? No, Mark, I never do. In fact, I'm honest with all of my students. I personally don't trade options because I believe options make things a little bit more difficult because you need 2 things to go right. You need whatever you're trading on to happen, and then secondly, you need the time value to be in your direction and the premiums. So it complicates things. I like to keep things cut and dry. I see nothing wrong with doing that. It's up to you. What I would recommend to each and every one of you, once you become a student of mine, this is what we always suggest to everyone, is to always paper trade first. Because so many students, even though they fall in love with the method, it may not be their thing to buy or sell the actual equity or the future. They might like to trade options. So we say, okay, start paper trading, but paper trade, see what option is the best one to buy. You want to buy in the money, out of the money? Do you want to buy the weekly, the leaps? It's up to you. So we always suggest people to paper trade. Having said that, these methods will work basically whatever tools you decide to apply them to, okay? Let's see here. I don't want to miss anybody. Let's see. People are getting errors with the link. Remember, the link is posted in the chat box, but it's okay. We will honor anyone who calls up Pro Trader Strategies. All you have to do is call or send them an email, and you'll have everything sent to you probably this day as well. Okay. Gentleman is asking, is there a software or an indicator that generates the signal? Doug is asking that. We have that with our strategies, with the more complicated strategies, but for what I'm teaching you in this $7 course, no, that doesn't come with it. The simple, don't want to rely on that outside source that doesn't have someone chat room. It can be an indication telling you when to buy or sell. We provide that for our students, but only as educational tools, because you can turn that into a crutch as well. I don't really need to learn this. As long as I see an up arrow, that means I'm supposed to buy. You should always know why you're buying, and then apply a little bit of insight as to whether you want to take that signal or not. Maybe it has too much risk. Just because the buy setup doesn't mean you should take it. You have to be a part of that process. This is what we said at the very beginning. We want to educate you so that you make your own trading decisions. We don't want traders simply coming and becoming members of ours and saying, show me the indicators and just give me a stuff. Because you're yourself out of the game. And you're telling the market, I don't know what to do. Never approach trading. Okay? Barbara's also saying, I have difficulties to buy because of my country. They do not have their payment. We have an excellent tech support and trading consultants at Pro Trader Strategies. Bars Bold, I would say just contact them if you're having difficulty because you're out of the country or your currencies, and they can set something up for you because, as I stated, we're traded in over 100 countries throughout the world. So everyone has different currency plans there. Let's see. With all this, Don is asking, with all this, you were short Thursday. How did you handle Friday and a 50-point bounce in the SBS with all this? You were short Thursday. How did you handle Friday with a 50-point bounce? Well, no, we didn't get short Thursday because the market never entered. If you look, we had short signals traded, But if you see, we never went in that entry. Remember, this is, once again, you have to know the rules here. Look to see if price traded below the previous low. That setup tells us to go short. All right? But if trade below there, doesn't matter. We don't get short. Now, if on an advanced trading, well, you get small money, okay? You get people lose money all the time. In fact, there's nothing wrong with losing money. It's just that you want to not be a consistent loser. If you lose money, you want to keep it to a minimum and then get back, and track again where the is going. T asks, do you have a trade room? I'm sorry, T, we don't, because once again, it's been my experience that people will turn trading rooms into a crutch. After a while, the people involved in the trading room, the advice being given, will be used as something to trade, and that's where I take my cues from. We only want to train our students to take their cues from one thing. That's the market. That's why we always say we are an educational company. We're not a trading room company. We're not a statistical company. We don't teach systems, so therefore we don't have stats, because everyone trades differently. I share with you a bunch of examples where they were winning trades. Some traders that we have at our courses got in and out rather quickly and took a quick half-point gain, where others may have stayed in for the long haul and took all 10 points. All right. Others may have scared themselves when they entered and it didn't go up the next day, so they exited unchanged. It's up to you. So there's no statistics because everyone trades them differently, different markets. Okay. People are asking what do you get for the price for the $37. Well, let me backtrack here. If you're wondering what you get for the $37, here's what you get: more high probability trading edges, where we tell you which indicators to use, which ones not to use. We also talk to you about the difference between a system and a strategy. We share with you the number one chart you should always be looking at of the markets, which we covered lightly today. We give you the complete rules to strategy number one. So we're not just giving you edges. I've given you 4 or 5 more edges, but we're also giving you the complete rules to a strategy. And remember, you can apply this to any market, any time frame. And then lastly, you're getting 40 years of experience as your personal mentor. You get my email address, and I'm going to be your personal mentor there. Okay, so you can contact me whenever you'd like. And all this usually costs $1,000 for our students. It's $37. I really don't think you can get that much of a deal for that price. Don says, you said you were at WM because you were under the 50 period. When did you cover? Once again, Don, it's up to the person. It doesn't matter. It's everyone covers differently. There's no right or wrong. You're looking for other people's decisions as to tell you what to do. Some people may have covered and said, I got out with a few points. Other people will be short. There's no right or wrong way where to cover or home to be in the trade. Or everyone comes up with a different entry point or a different exit point. The main thing is you can see the questions. Everyone is looking for answers about someone else. What did you do? Where did you cover? That is why most traders decide answers what to from the market, not from us. I trade differently because I'll break even with my trading. Where students who made thousands of dollars. That's great. There's nothing wrong with that. Let's see, someone's asking, does the video give strategy number 4 on this webinar? No, it doesn't. We only give you strategy number 1. Strategy 4 is one of our most consistent, and it's our most popular strategies. That's an entirely different strategy. You can contact Pro Trader Strategies for more information on that. But we're giving you one of our best pullback strategies, strategy number 1. And let's see. You gave a video seminar a few years ago. Do all the rules apply to today's market? Yes. If you're speaking, and I've been speaking for roughly 7 years, the rules are basically this. They're willing to take a lot of risk to be in there for the long haul and the big trades. The big winners. So even though they may get the same setup, how you approach. So this doesn't mean that we change, maybe fine-tune and alter and edit just a few different things to meet your needs. The strategy is still intact. Just a few things may have changed along the way. Where you exit, where you place your stop, and this is once again comes through my mentoring. You're getting 40 years of experience. Okay. Can one combine strategies 1 and 4? Yes. In fact, gosh, I just posted a strategy that combines both of these for a long signal. Unfortunately, I can't remember what it was. Boy, I'm sorry. I just posted it last night. But yes, it happens all the time, and it doesn't mean that you have to follow the rules for both strategies. You should only be trading one strategy at a time. It just means that when you have a confluence of two entirely different rule sets that generate a buy or sell signal, you have a little higher level of consistency. Doesn't guarantee the trade's going to be a winner, but it's giving you a little higher belief in the consistency in that setup. Okay, but yes, you can combine them. Let's see. How much is strategy number 4? Well, you know what? I don't deal with any of the prices or any of that. The selling with all of our strategies or techniques, that's all strategy, Pro Trader Strategies market. So contact them. Let me give you the info for them once again. They perhaps if you said that you attended this, they can give you a special, maybe, who knows. But we're only talking about the Secrets of a Stock Exchange $37 offer today. But perhaps they'll, if you purchase that, they'll give you a deal on strategy number 4. That's a great strategy itself. I trade that just about every day myself. Okay, I just have a few more minutes. I don't want to step on too much time. I know I've gone over the line a little bit. Let's see. Jake asks, I apologize if you've already answered this, but are your stops ideas covered? Yeah, we go over stops, Jake, in the course, and we go over and give you a number of different ways to apply stops and also how to track the trade. A lot of traders like to get in trade and get out rather quickly. So you just have a basic stop. All right. Other traders like to move their stop to unchanged. They just don't know when to do that. We show you how to do that. Other traders like to stay in for the long haul. They say, you know what, I think there's a lot of room to move. So we show you how to track it as well. This is all in the course. Okay. This is all in the strategies.
Traders, and it is Mark's first time.
I'll take one more question here. Is it free to retake the same session after the first session? I'm not sure what you mean to retake. When you say that, Melinda, I don't know what you mean. If you're talking about a course, if you have the course, it's yours for life. But so you don't have to retake it, because you should have all that information readily accessible to you. I would contact Pro Trader Strategies. Once again, my only concern is education. I only deal with educating and mentoring people. I am constantly in correspondence with my students, making sure that they understand things, and most of the time their testimonials telling me how great they've done for the first time they've become consistent in their lives. That's what I'm trying to do. I'm not trying to promise you you're all going to become millionaires by 2017. All I'm trying to share with you are the things that have worked for me and 40 years of experience, having someone as your mentor. So hopefully, if you're struggling the same way I was, you can get on board to that road to consistency. That's all I'm trying to instill in all of you, and hopefully you'll be able to be trading not just 2 or 3 years, but 10, 20, 30, 40 years down the road, okay? So if you're really interested in getting on that road starting in 2016, take advantage of that really deep discounted offer of $37. Contact Pro Trader Strategies if you're interested in anything else. And remember, if you're having difficulty with the link, it's right here in front of you. You can copy and paste that, or you can go to the link on the far right-hand side in the chat box. Ultimately, you can call or email Pro Trader Strategies, and they'll set you up right away. But remember, that $37 deal is just for the next couple of days, so take advantage of it while you can before it goes back up to $1,000, okay? In closing, I want to thank you so much for attending. I want to thank Trade Thirsty for giving me the opportunity to speak, Janet for offering me the time here, and I wish you all the best of luck trading, and I look forward to all of you becoming students of mine at Specialist Trading, okay? Thank you so much, and I'll see you next time.